Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed and quiet markets around the world today, as there's no really standouts, as we're probably waiting to hear from the Fed today. How does the overseas landscape look to you?
You know, it's pretty quiet, like you said. I think we got through the BOJ, we got through the ECB, so now today is our Fed day. So, you know, no real standouts, like you said, but most of the trends off the lows are still intact, even though they're a little long in the tooth. You know, if you look here at the FXI, which is the barometer for China. China was a big obsession for a while, a few months back, and now ever since it made the low here, it's pretty much been just trending higher. So as long as this trend stays intact, I don't think China is a headwind, and at some point perhaps it wants to continue up towards some bigger resistance. So if you take a closer look here at the FXI, not so bad above the 8 and 21 day, and now we'll see whether or not this upper wedge continues or we see some downside. You do have some green arrows in Europe, the EWG, okay, which has been a proxy for the DAX. This sector and trend has been broken, and it's still way below the 200 day, but overall, you can take advantage of counter trend moves, and this one still remains intact. So as long as just say the EWG holds above this level here, taking another close-up look so you could see it, it's still healthy. The 8 days down here, so maybe you don't want to chase some of these European names, but as long as it stays above this and even the 21 day, you'll see not much of a headwind coming from overseas yet. So really all eyes, like you said, is on today's Fed.
Futures are flat as we are waiting for the 2 o'clock statement from the Fed today, as I stated. So Scott, what are some different scenarios that you see happening for action around this news?
Well, usually on Fed Day, there's like 3 or 4 different false moves. And you have these pivots that the markets put in, and the algos and the computers want to play with them. So to me, I've thought about scenario A, B, and C. What could happen and how will I respond to it? Because you also have a lot of people saying that this rally off the lows was a tactical bull running into intermediate bear. So if you want to take a look at the SPX, you will see, first let's go back a little bit. Let's go back a little long term. I'll take you on a little history lesson here, Chelsea, where you'll see, this was major support. So here you have major support, going across, and this was your double bottom. Almost a similar double bottom to what happened here. And now we are coming into bigger resistance, a spot that market's going to have to prove it can get through, and it probably won't do it the first time. Okay, here is when your trend broke. This was a longer-term trend that broke, that had people probably get out of the way before the flash crash low last summer. Then we rallied back up, consolidated, and then went back to those lows. And right now we're above this spot. So if you want to go now short-term tactical, which is where a lot of us make our money, we've been above the 8-day moving average during the course of this entire double bottom move. This is when you had your move off the lows. If you missed it, okay, because it happened fast, this was when some traders got a little confident to start building into longs as the 8 and 21 day held. And then from here, we've been above it all the way. So now you have this inside range. So in order for the bears to have any traction, you're going to probably need some type of hard close below the 8-day moving average, which is right here. That's a 2005. And for more follow-through to hit the trend line that I just drew around 2040, you're going to need to get above this 2024. So write down 2005, 2024. Well, sometimes after the Fed statement, you get a push above this, and then anyone who's been positioning short and rolling it up gets squeezed, and you have a quick move up to 2040, and then it could potentially come back below it, and we all know what that would create, a red dog type reversal that could signify a little bit of a pause, and then we see a corrective phase, or we push above and hold above, and then that'll open the door for further upside, or we never get above there and we break this 2005 and we see what's next. So really here, you have an inside range, which at least we could trade off that. You have a micro resistance at yesterday's high at 2015, and then a more significant one in 2024. And then on the support side, you have 2005, and then you have the 8-day moved up all the way to around 2000. So that's your micro roadmap today that's running into some macro headwinds.
There's often sector clues that help you determine which scenario will play out. Which will you focus on today?
Well, some guys are pointing out the weakness in the Russell, which the past two sessions the Russell's been down while the S&P's been sort of strong. So that's one thing that could be a clue today. You know, you look at the move in the IWM from the lows, you know, it's not too devastating that, you know, it's still consolidating here. It lost the 8-day, so if you wanted to get out of the Russell, if you've been in it ever since this move from, you know, this little inside intermediate area, that's fine. But all in all, it's still flagging here and above the 21-day. And for such a weak sector, you know, not the end of the world that it's losing the 8-day, but it's definitely lagging a little bit. So for the bulls to take control back, you're going to have to see this descending channel get taken out, which, you know, could happen if it gets above 107.28. If we trade below this pivot here and stay below it, then you have the 21-day down here, 104.85. So here's micro support 1, here's bigger support, here's micro resistance and bigger resistance. So the Russell is something to watch. Then also the Qs, you know, which has been pretty strong. That's sitting here now, you know, after a 3-day move or a 3-day digestion above the 8-day, we could watch that. As long as the Qs stay above 105.66, can't get too bearish, but a close below that, and then you have a move down towards the 21-day. And then if it could push above this with any kind of force, here is you know, that 106.92. So I would think this 3-day range in the Qs is something to base some of your action on. And then lastly, you know, let's take a quick look at the banks, because sometimes the banks do move on Fed day, and here you are pretty tight. You know, if you take a look like this, still above the 8-day, still trending from the lows. So as long as this stays intact, the momentum bulls will be okay with the banks. And then perhaps if the Fed is a little bit more hawkish, okay, you know, you could see a move above this 22.52. And if you want to use one or two banks, which right now I'm long JP Morgan as a potential, you know, key, you know, I think this is probably the best one to use, as you had a big move off the lows. It's really, really tight here. So in order for the banks to help lead this move today, if the Fed's a tiny bit more hawkish, you know, this has got to get above and stay above this 59.20 to 59.50. So those are three different sectors that could give some clues on which scenario works out, you know, in the overall market today.
It seems like traders had some success in buying the dip in high beta tech yesterday. Scott, do you think this will continue, or how will you hold your positions there?
Well, almost all week, you know, every day we've had a small little gap down, and the dip in Amazon, Google, Netflix, they've all been buyable, you know. So, you know, today they're not down, they're kind of flat. So the question is, can they lead the market pre-Fed, or can they show relative strength or weakness post-Fed at 2 o'clock? That can give us some clues. You know, so if you look here at Amazon, you know, Amazon is acting better. Okay, it's not a blockbuster move, but all in all, Amazon still remains one of the keys in this market. You know, at this point, it held higher support, and now it's coming into this spot. So if Amazon wants to lead today and show some power, it can get perhaps above this 581.50. If Amazon says, okay, enough is enough, you know, I'd probably get stopped out myself here around 568 or sooner. So I am in some Amazon. It is tight. You know, Google has had a big move. You know, I'm not in Google just because it was up 4 or 5 days in a row. This actually even looks healthier than Amazon on the chart. I would say, you know, for Google to remain healthy, you know, it needs to hold this 2-day range, or not even healthy, just keep momentum and keep the pent-up leadership that it had. So here it held here yesterday. So as long as it stays above 742, I think this remains, you know, a momentum area. And then if it happens to get above this spot, perhaps it squeezes one more time, but then just make sure it stays above there, because momentum names are only good when momentum stays. So, you know, that's, you know, a clue or a key for today, as well as Netflix. Netflix hasn't really picked the direction. You know, it's been weaker overall. It hasn't been the same for most of this year, but it's coming right into, you know, this descending trend line here, and then you also have this ascending channel right here. So at some point, this is going to, you know, resolve either to the upside or the downside. Maybe it gives us some clues, or maybe it tries to fake you out a few times. You know, here you have 98.50 to 99. If it gets above this on heavy volume, perhaps it goes to the upside. If it, you know, gets below this 96.50-ish and stays below it, not just, you know, hits below it, perhaps that'll give you some clues that, you know, it wants to go back lower. So Netflix, you know, is something that, you know, could resolve either today or tomorrow, and something that could be a focus, because it's a tight pattern, and tight patterns usually expand, especially for Netflix.
Apple had a strong move yesterday after the Morgan Stanley upgrade. I'm sure that helped your followers that you kind of outlined a strategy for them. Are you still long the position?
A few days ago I was like, you know what, Apple's acting well. I used to trade Apple a lot, but recently it's been kind of weak, so I've been away from it. So every now and then when I put an Apple chart on Twitter, some guys pay attention because you know, it used to be something I used to react with or interact with every day, and now it's been a little bit more sporadic. So anyway, Morgan Stanley did come out with an upgrade, $135 target, and it gapped up, so those people involved, you know, did well. So it was even viable after the open. At this point, I am still long. I think that you know, if Apple wants to keep its momentum, this is actually a good clue for today. It probably tries to hold a big portion of yesterday's gap. So if it happens to get below 103.85, I'll probably get away from it. But if it goes below, comes back above, I'll tactically trade it. But holding above this and adjusting above this could be good for one more additional move above yesterday's high of 105.18 to hit, you know, some of the moving averages above, and the next one is 106.52. But at this point, you know, strategy number one was here, and then it held nicely, which is why I put it on Twitter right around here. And now, you know, let's see if it could digest and go and continue to act well, as, you know, it still has some more room, and that event is until next week. And sometimes they want to manipulate the markets with Apple because it's so heavily weighted in the S&P and the Qs.
And what about social media? We have a mixed landscape here. Do you have any special thoughts?
Yeah, they've been so dislocated from each other. You know, LinkedIn's just been broken. It's been quiet, and now all of a sudden I walked in this morning and some guys are on the VTF like, what's the matter with LinkedIn? It was downgraded. So if you look at LinkedIn, you know, it looked as if it was just sitting there quiet, tight, and now all of a sudden it's down $6. But look at it also, below every moving average. So, you know, it's been broken, so you had to have a thesis to be in LinkedIn. At this point, this tight range that it's been sitting in, you know, could be resolved down with it down $6 with the downgrade. I would say, you know, if you are in it, you know, just take care. You know, that means you've probably been sitting it anyway for you know, a while ago. This little pivot here is 108.81, so maybe it's buyable into that, but I've been just avoiding it. It's a broken name. One name that's not broken is Facebook. Facebook's been one of the best names out there. I'm actually still long it overnight. You know, it had this ascending channel that looked to be, you know, tested, and it got broken to the downside, gave you a small downside trade, but held. And since that, it's been grinding back up, closing above this pivot here yesterday. So I would say, you know, I'd love to see Facebook hold above, just say, you know, 109.50 for another move. And if it gets above this 110.83 with a market spike, you know, perhaps that, you know, it works its way back up, not towards the highs, but a decent move. It could also do one of those, you know, red dog reversals where it pushes through, squeezes some shorts, puts a topping tail in kind of like here, you know, and then has some kind of decline. But as of now, you know, I think it's the most constructive looking name in social media to stay with, especially institutionally. You know, Twitter gave you a trade post earnings, and then ever since, you know, the red dog reversal right around $20, it's just been for sale. You know, broken names are hard to trust, and even though you had your washout low here, and I remember I was in this trade from 1870, sold into that move. I didn't expect for it to all of a sudden fall apart, but it has. You know, if you want to tactically look at Twitter today, if it happens to break below 1614, you know, put a bottom tail and come back above, maybe you get a short-term active trade. But, you know, last time I tried to do that, it just failed. I'd avoid it unless we see something set up again. This was a nice setup right here, and since then, you know, again, a better short versus long, and, you know, just doesn't get any traction over there.
Yesterday, the VRX got hit hard, and it's slower today. Will you look at that name for tactical strategies today?
I think tactical is the only way to go about it. You know, yesterday the news hit, and it was a disaster du jour. It's been a disaster for multiple months. You know, this stock has been broken, gave you massive clues to be out of the way or be short, you know, well before, you know, additional news hit yesterday. And if you look at VRX, you will see that this trend has been very broken. You know, if you follow my rules of, you know, below the 8 and 21 day, you're not in it as a day trade. Below the 200 day, you avoid like the plague. Well, you know, this broke the 200 day here, okay, which was back at 200. Now it's 33.51. That's when the institutional guys get out. You know, on top of, you know, a small head and shoulders top pattern here, you know, with the left shoulder, the head, the right shoulder, on top of an engulfing bar that pretty much marked the top, another engulfing bar into the break of the 200 day. And then from there, you had a bear flag, and then, you know, tried to stabilize again before, you know, breaking back below this level here. And now, you know, all of a sudden, lo and behold, this is what happened yesterday. Mass exodus. So, what do you do now? So it's down $2. I don't know if you press it down open, but if it happens to, just say put a low in at, 31 and takes back this $33 for a squeeze, maybe you could have a small tactical long, but it's not something to hold. Just use your 5 and 15-minute charts. Be careful. Then you have MNK, which almost like a Me Too play. This stock also, broke its upper level and all the moving averages here. So this was most of your, spots to get out. Hold on, right there. And then when it lost a 200-day here, and now you have a pretty harsh engulfing bar there. So, I would just continue to take care of these things. Could come under fire again. And the low here on this stock is 57.69. That is your pivot.
It's good to know where bonds are on Fed Day. Yesterday, or should I say, we had a pullback in TLT. What are some key levels here?
The TLTs have been under pressure probably for 2 or 3 weeks already. Excuse my voice. Yeah,
It's okay.
Gotta caffeinate up. It is the morning. Hold on a second.
It is.
Do you drink coffee in the morning?
I do. You have to.
Yes.
And I drink iced coffee.
Okay, iced coffee. I drink iced coffee even in the dead of winter because, it goes down a lot faster. So the TLTs. We'll go to the TLTs right now, and you'll see that, you did have a reactionary high right here, a lower high. Now it's sitting, on bigger support. And so, like Chelsea said, on Fed Day, sometimes they do get, some decent action depending on whether the Fed is hawkish or dovish. So with that being said, here's a small pivot on the TLTs. If they happen to be, real dovish, maybe there's a trade above this 128.66. If they happen to insinuate that a move is going to happen in June, and maybe 2 or 3 of them, maybe this continues to the downside. But all in all, if you sold the panic high here, or the lower high there, or the lower high there, you could look at it today to see if there's any kind of action. And then another thing, on another note with gold, Chelsea pointed out the breaking of the 8-day moving average a few days back. Then you had some downside follow through here. So now it's trying to hold this support. So if you want to trade the GLDs, just key pivot support now is 117.36, and then you have some resistance back at this 119.11 where it broke down from.
Any other closing thoughts before the news today?
I just think everyone gets all anxious, like a big sports event on Fed Day, and sometimes it's crazy, and sometimes you become algo fish. You know what that means?
No, I don't.
All right. Actually, algo bait.
What is algo bait?
It means the computers use you to make money. So it's like a feeding frenzy. So, you buy high, you sell low, you short low, you buy high, and that's the last thing you want to do, when the ranges are crazy. So, so I would say, see what type of conviction there is. I outlined all those scenarios, or all, the levels in the S&P where you have pretty much in the spiders. I didn't talk about the spiders. You have last Friday's gap, and that's right here. So in order for the bears to growl, okay, you need a big move below this 201, and then it has to stay below. Remember on the ECB day, which was that Thursday, I remember fading the open, getting short, and then I got squeezed all the way up, and then you had more upside because it did not close below, this key level here. So for the spiders, watch that. 201.05 is that level. Then the same thing from the upside. It could push through this 203.04 and squeeze up and fill the leftover gap here, which takes it almost to about 204 or maybe even higher. But then make sure it closes above that, because sometimes these algos push it above, stop people out from their, their shorts, bait people in long, and then reverse. And sometimes they steal your lunch by stopping you out of your longs here to reverse it up before better action tomorrow. And that's what happened here. So for today, if you don't have success on Fed Day, do less. I tend to not have a great day on Fed Day. So, I'm going to manage some of my positions and then figure out, what we could perhaps do, because there is a trend that sometimes develops in the last hour. And sometimes, the following day, like tomorrow, is the best day, because that's when you get a real trend day, and it's a little bit more clear cut versus the false moves, and you don't want to become, what was that statement?
Algo bait?
Is
that what it is?
Yeah, you don't want to be algo bait. So there you go.
All right. Well, I'm sure we'll watch out for that today and talk about it more tomorrow. Have a great trading day.